Bitcoin hash rate rebounds, breaking historical highs. With the blessing and protection of a main character aura, Ethereum will outperform Bitcoin in the short term. Legendary investor Soros whales turnaround, pouring $257 million into Bitcoin. Vitalik sparks a inflation storm in the crypto industry, redefining inflation causes heated debate. The US SEC suffers another setback in the Mt.Gox case, its long arm cut short. The US SEC is slashing the crypto industry indiscriminately, but judges won't indulge this bad habit. Mt.Gox transfers nearly $100 billion in Bitcoin. Is a dump really coming? After 5 years of silence, Mt.Gox finally acts, dumping a huge amount of Bitcoin into the market. Reimagine the world with cryptocurrencies, grasp the 24-hour wealth code, and get rich slowly together. Wednesday, May 29th. So here's Bitcoin TV's channel. I'm Zoom, and this is 24-hour cryptocurrency headline sponsored by DeepCoin. Since the Ethereum spot ETF was approved last week, the Ethereum to Bitcoin ratio has surged from the previous 0.045 to the current 0.056. This also indicates that the expectation of the Ethereum spot ETF being listed and traded has attracted investor interest in Ethereum, and the value of Ethereum relative to Bitcoin will continue to rise in the short term. This has also led to a significant increase in Ethereum staking funds TVL, soaring from $55 billion to $65 billion, an increase of 18% in nearly a week. The upcoming EIP 4844 upgrade in 2024 will improve the efficiency of the Ethereum network and lower transaction costs, especially benefiting Layer 2 solutions. As of noon today, Bitcoin is above 68,000 and Ethereum is over 3,800. Although Bitcoin may be more stable in the long run, Ethereum's technical progress and financial incentives are expected to outperform in the short term. Since the Ethereum's rebound in March, the number of Ethereum profitable addresses has continued to decrease from 111 million to 92.23 million, a decrease of nearly 17%. However, under the stimulus of the positive news of the Ethereum spot ETF, the price of Ethereum rebounded significantly, and after Ethereum exceeded 3,600, the number of profitable addresses directly broke a new historical high of 115 million. From the staking perspective, users holding more than 32 Ethereum can participate in Ethereum node staking, but as Ethereum rebounded, the number of Ethereum staking nodes and addresses holding more than 32 Ethereum continued to decrease. This is also a reflection of profit-taking and hoarding behavior by institutions and whales after Ethereum's rise. At this stage, the chips are gradually accumulating in the hands of institutions and whales, which is very bullish for Ethereum's price. Data shows that Bitcoin's hash rate has rebounded and surpassed the historical high before the forced reward halving event on May 8th. The 7-day simple moving average SMA of Bitcoin's hash rate showed that the network hash rate had dropped to a low of 582 EHS. This week on May 25th, Bitcoin's network hash rate climbed to a new high of 657 EHS, currently at 620 EH. The hash price represents the daily expected value of hash rate per second per million trillion hashes, currently exceeding 53 per million trillion hashes. Compared to the hash price of less than 45 per PB hash in early May, this is a significant improvement over the past 28 days. Despite fluctuations, the hash price has increased by 20% in May. Additionally, the more volatile 3-day SMA saw the hash peak at 691 EHS. Today, we turn our attention to the legendary investor George Soros, who is on par with the stock guru Warren Buffett and known as the financial whale. According to the Bloomberg Billionaires Index, the 93-year-old Soros has a net worth of $6.5 billion, ranking 447th on the global rich list. He became famous for shorting over £10 billion and making over $1.1 billion in profits in 1992, earning him the nickname the man who broke the Bank of England. Subsequently, in the 1997 Asian financial crisis, he attacked the currencies of Thailand, Malaysia, and other countries, becoming a controversial financial whale. Soros himself had publicly stated in 2018 that Bitcoin is a typical bubble and cannot be considered a currency.
Bitcoin is not a currency because a currency is supposed to be a stable store of value, and a currency that can fluctuate 25% in a day can't be used, for instance, to pay wages, because the wages could drop by 25% in a day.
In recent years, his stance seems to have shifted. Recently, it has been discovered that he purchased convertible bonds from MicroStrategy, a U.S.-listed company known for its substantial Bitcoin holdings. which equates to an indirect investment in Bitcoin, according to filing documents submitted by Soros Fund Management to the US SEC this month. As of the end of Q1 2024, Soros funds held over $257 million worth of MicroStrategy convertible bonds. Based on the document information, it is speculated that the company might have sold part of MicroStrategy convertible bonds during the first quarter of this year or converted them into shares and then sold them for profit.
As a US-listed company, MicroStrategy has attracted attention in recent years for its massive Bitcoin holdings. Currently, the company holds over 214,000 Bitcoins worth over $14.5 billion. For investors, holding MicroStrategy's convertible bonds is equivalent to indirectly investing in Bitcoin. So Soros' decision is also seen as an indication of his positive attitude towards the cryptocurrency market. However, Soros' shift in attitude towards Bitcoin did not happen overnight. As early as 2021, there were reports that Soros Funds Management Company had started to venture into cryptocurrency trading. Subsequently, the company even invested in several crypto-related companies, including Bitcoin mining giant Marathon Digital Holdings and the payment giant Block. This series of investment decisions not only showcases Soros' in-depth research and understanding of the cryptocurrency market, but also reflects his positive attitude towards this emerging market. Recently, Federal Reserve official Logan warned that inflation risks are intensifying and emphasized that it is still too early to consider rate cuts. Notably, the U.S. one-year inflation expectation for May significantly exceeded market expectations, with an actual figure of 3.5%. At the time, the U.S. Consumer Confidence Index for May was lower than expected, bringing some uncertainty to the market. As is well known, in traditional economics, inflation refers to the general rise in the prices of goods and services, which is usually related to an increase in the money supply. But does inflation apply to cryptocurrencies?
Recently, digital media company Axios posted an eye-catching messages on the X platform, claiming that the term inflation now more often refers to high prices rather than rising costs. However, Ethereum co-founder Vitalik Buterin quickly refuted this definition, firmly stating that the cryptocurrency community has given the term a new meaning. Buterin emphasized that though consensus in the Ethereum community, inflation now solely refers to the increase in the total supply of currency. This view has garnered widespread support on the Farcaster platform, with endorsements from experienced users like former Coinbase employee Benji.eth. Meanwhile, Buterin actively advocates for community-centric solutions, prioritizing privacy protection and vulnerability fixes in his work.
We wants to try to decentralize people's experiences over time, or at least remove the need to have a centralized intermediary.
Traditionally, inflation refers to a general rise in the overall price level of goods and services, resulting in a decline in purchasing power. However, Buterin's redefinition indicates that global inflation is caused by an unlimited increase in the total money supply. This semantic shift deviates significantly from established economic principles. At the same time, cryptocurrencies are gaining wider adoption, and due to their limited supply, they are gradually becoming more like stores of value. In today's social climate, we think cryptocurrencies might be the only currency capable of combating inflation. In recent years, when it comes to the US crypto industry, the SEC has been biting indiscriminately, willing to kill 1,000 rather than letting one go. Last year, the SEC sued the world's largest digital currency exchange, Binance, and its CEO, CZ Zhao, and later initiated a lawsuit against the largest US exchange, Coinbase. In terms of the extent of attacks on the industry, although the exchanges are targeted on the surface, accusations such as cryptocurrencies are unregistered securities implicates far more entities than just the Binance and the Coinbase. In terms of the breadth of the crackdown, apart from targeting Binance US, the lawsuits also targeted Binance International and Zhao, who is outside the US, proving that the SEC wants to extend its regulatory reach beyond the US and exercise a long-arm jurisdiction. These actions naturally spark protest from the industry, and the legislature has also reacted.
According to Cointelegraph, U.S. federal judge Robert Shelby has ordered the SEC to pay approximately $1.8 million in legal and receivership fees related to the civil case against Mt.Gox. The SEC sued Mt.Gox in July 2023, accusing the crypto platform of defrauding investors out of at least $49 million. That same month, at the SEC's request, Judge Shelby froze the company's assets. Recently, the case was dismissed, with the judge pointing out that the SEC exhibited bad faith and made false statements in the temporary restraining order to freeze Mt.Gox's assets.
I don't care if people think that they have a sketchy behavior. They're a regulator. They're regulated. And they regulate Coinbase. So I think Gary, and I've known Gary for 20 years, is probably the most sophisticated of regulators. Obviously, a self-interested man wants to take on the SEC. What does he think? What is it, like a street fight? Sharks, Jets?
This ruling is a significant victory for Mt.Gox, as it means the SEC cannot proceed with the current case. Interestingly, most regulated industries tend to back down or secretly counter excessive regulation through backroom lobbying when faced with government enforcement actions. However, the cryptocurrency industry is doing the opposite, with industry players using public forums, including the courts, to openly confront the regulators. However, as one of the few institutions daring to openly defy the SEC, Coinbase still softened its stance in front of the market. On May 5th's first quarter earnings conference call, Brian Armstrong made a 180-degree turn in his attitude, stating that although there is uncertainty in U.S. regulation, especially regarding the SEC's unpredictable enforcement actions, Coinbase is 100% committed to the U.S. market for long term. This is truly the wise adapt themselves to circumstances, although there are checks and balances between the U.S. regulators for a relatively new industry like cryptocurrencies, where U.S. laws are lacking and judicial precedents are insufficient. The SEC has a broad discretion, giving it the ability to threaten the industry's survival. At present, the limit of what Congress can do is to send protest letters and propose the removal of the SEC chair, and this situation cannot be changed until regulatory laws are enacted. However, the recent U.S. election seems to have given us hope. Mt.Gox, the exchange that left a profound mark in cryptocurrency history, declared bankruptcy and entered bankruptcy protection in 2014 after being hacked for over 800,000 BTC. Since the bankruptcy, its repayment plan has been the focus of market attention. Mt.Gox's massive BTC repayment plan has been seen as a sword of Damocles hanging over the crypto market. Because Mt.Gox's convoluted repayment dynamics have more than once triggered a certain degree of market panic. In December 2023, multiple Mt.Gox creditors revealed that they had received compensation, and news that impacted Bitcoin's price, which briefly declined afterwards. However, unlike past repayment dynamics, this time Mt.Gox involved the transfer of a large amount of BTC on-chain.
Arkham Intelligence reveals that Mt.Gox has transferred assets from its cold wallet for the first time since 2018, with over 140,000 bitcoins moved at the time of writing. The last activity from a Mt.Gox related wallet occurred on July 24, 2023, but that transaction only moved a small amount of Bitcoin, around $1, speculated to check address control permissions. CryptoCoins researcher Axel Adler also stated that all funds from Mt.Gox's cold wallet have been moved to a new wallet, signaling the start of a market sell-off.
This move has sparked market speculation as to whether it means Mt.Gox is about to begin large-scale repayment work and whether this process will have a significant impact on the cryptocurrency market. Mt.Gox's repayment plan requires distributing its 142,000 BTC and 143,000 BCH holdings to creditors by October 34, 2024. This Bitcoin transfer is likely in preparation for the upcoming repayment work. However, the implementation of this repayment plan is a double-edged sword for the cryptocurrency market. On one hand, Mt.Gox repayments will release a large amount of Bitcoin into the market, which could put selling pressure on it to lead to a drop in BTC prices. On the other hand, it also means that creditors who suffer losses due to Mt.Gox bankruptcy will be able to recover part or all of their losses, which is undoubtedly a consolation and a compensation for them. So will Mt.Gox repayments really cause the market to dump? We need to further observe and analyze this. First, although Mt.Gox transferred a huge amount of Bitcoin, the specific repayment timing and method still need to be further determined. Second, the volatility of the cryptocurrency market itself is very high, and any large transaction can impact the market. But this does not necessarily mean that the market will experience a sharp decline.
OpenAI announced that its board has established a safety committee responsible for overseeing the direction of AI development. The company stated that it has recently begun training its next generation frontier model, which is expected to reach the next capability level on the path to AGI, Artificial General Intelligence. According to HODL 15 Capital, BlackRock's IBIT Bitcoin holdings have reached 288,670 BTC, surpassing Grayscale's GBTC holdings of 287,450 BTC, making it the largest Bitcoin ETF by BTC holdings. Recently, El Salvador President Nayib Bukele met with ARK Investment Management CEO Cathie Wood to discuss Bitcoin, new capital markets, and innovative opportunities. Aptos announced on the X platform that its ecosystem trading volume has surpassed $600 million, with DeFi TVL total value locked increasing by 376% in the first quarter of 2024. Illuvium announced on the X platform that its public beta test network is now live. Players can download and experience the game via the Epic Game Store.
In life, no matter what the relationship, if it cannot provide emotional value, economic support, or positive companionship, none of the three, then letting go is the wise choice. But a person's best asset is not how smart they are and how high their education is, or how good looking they are, nor how rich they are. The key lies in two words: reliability. So that's the main content for today's program. If you find our channel valuable, welcome to share, follow, and become a member by clicking the top right to see our membership benefits. Our channel focuses on curating valuable news in the Bitcoin, blockchain, and mining industry. Monday to Friday are news updates, and Saturdays and Sundays are in-depth special reports. You can access our Monday to Friday blog codes and articles by our special authors to get rich slowly together. See you tomorrow.